lot of really bad policies so far that I've seen from Trump. The support of the big, beautiful bill, which is a complete disaster. And he didn't just sign it because that's what Congress passed. He actively promoted and encouraged Congress to pass a bill that actually took the Biden deficits and expanded them. So to the extent that the Republicans and Trump were critical of the deficit spending under Biden, they're just a bunch of hypocrites because now they're going to spend even more. They had the opportunity to reverse some of that excess spending. And not only did they fail to do that, they added to it. So that was terrible. The tariffs are bad. They're taxes on Americans. They're not taxes on China or India or Canada. It's a lie to believe that the rest of the world is going to pay tribute to America and pay these tariffs for us. You know, the quasi-privatization of Fannie and Freddie is going to be a complete disaster. They should be shutting these enterprises down, or at a minimum, keeping them under government control, which was when Fannie Mae was originally established, it was owned by the government. It was a government agency. It didn't become a government-sponsored enterprise until 1970. So from 1933 to 1970, it was part of the government. It's worse to privatize it, but then put a government guarantee, which is something they never had. You know, up until 2008, there was an implicit guarantee. The government actually said, we don't guarantee these entities. There is no government backing. The markets just assumed that if they got into trouble, the government would step up. Well, now Trump wants to make the implicit guarantee explicit by saying, don't worry, lend these companies all the money you want. If anything goes wrong, the taxpayers got your back. This is going to be the biggest moral hazard we've ever had. I mean, no Democrat ever tried to do something this reckless, and now Trump is going to do it. Meanwhile, he just shook down NVIDIA and AMD, and they're going to have to pay tribute to the U.S. government. They're going to have to give the U.S. government like 15% of their China sales, so Trump will allow them to do business with China. I mean, this is totally unconstitutional. Trump doesn't have the authority to do this. And also, it amounts to an export tax, which is completely unconstitutional because the Constitution doesn't even give the government the power to tax exports. They can tax imports, but those are supposed to originate in the House of Representatives, not with the White House. So Trump is making a mockery of the Constitution. He is grammatically expanding the power of the government, particularly the presidency. He is undermining free market capitalism. He's picking winners and losers, although I think he's picking losers. He's getting in bed with individual companies. And people say that Trump is pro-business. That's anti-business. Just because the government is supporting some businesses doesn't mean you're pro-business, and it doesn't mean you're pro-free markets, because when you're backing one company, you're disadvantaging many other companies. So the government is, putting its thumb on the scale, and it's not staying neutral, which is what it's supposed to be. Well, the crazy part about the fact that he fired her was why. He didn't fire her because all 6 of the last jobs numbers have been wrong, right? Because every one was revised way down. Meanwhile, every time one of these jobs reports came out better than expected, Trump was taking credit, even though we now know that every single jobs report that he took credit for wasn't a beat, but it was a miss. And in fact, the last 2 reports were revised down by the most in 50 years. So the job creation record so far on Trump's watch has been dismal. And I was even saying this when they were celebrating a couple of months ago. I was saying, keep the champagne corks, it's too early to pop them, because I knew, and I said on my podcast, that these numbers would all get revised down because there is a propensity, the way they do it, to overestimate the job creation. And then when they get more data, they're able to correct it. But almost all the revisions are down, which shows you that the methodology is skewed. It's not a random error where sometimes they're too low and sometimes they're too high. They're almost always too high, and almost all the revisions are to the downside. So when you get these reports, you have to take them with a grain of salt. But, Trump celebrated them. But instead of firing her just because, she was getting it wrong, Trump claimed that she was being fired because the numbers are rigged. He's trying to say that the downward revisions shouldn't have happened, that the job creation must be much greater than what it really is, and that she was helping to rig the numbers to make him look bad. And so that's why he fired it, which is all a bunch of BS. In fact, if you remember, when Donald Trump ran for president the first time, his main talking point was that the government numbers were fake, particularly the employment numbers. That was his biggest talking point. He would say unemployment isn't 5%, it's 10%. Like every time he gave a speech, the real unemployment rate was higher, right? And of course, the minute he became president, he took credit for low unemployment based on those same numbers. And one reporter actually called him out on it. And he said, hey, just a few months ago, you were saying all the job numbers were fake. Why are you taking credit for these numbers? And Trump's answer was, well, they were fake then, they're real now. But they're, of course, the same numbers. So it's all a bunch of BS. And the truth of the matter is, we have a weak labor market and we have high unemployment. I mean, unemployment is not 4.2. The jobs report that we got, the last one, the U6 unemployment rate, which is closer to the actual rate, closer to what we used to report, back in the 90s, that's 7.9. So 8%, that's high unemployment. I mean, we're miles away from full employment. It's amazing that the Fed looks at these numbers and takes them as if they're accurate. They're not rigged, but the methodology for computing them, that was rigged. It was rigged a long time ago to make the number lower than it really is. Well, I mean, look, everybody wants to take credit for creating jobs, right? Because people want good jobs. But the reality is, they're not being created. This is an illusion. And in fact, if you look at the jobs, in the last 2 months, we lost, I think, 25,000 manufacturing jobs. Those are the jobs that Trump has been promising to create. And those are the ones that we keep losing. The jobs that we're gaining are in local governments. What do we need more of those for? In healthcare, in social services. These are the same rotten jobs that we had under Biden. And again, a lot of these jobs are part-time. They're not good quality full-time jobs. Well, I mean, I think there's a loss of confidence in the dollar and in the fiscal, integrity of the United States. I think it should be clear to our creditors that we're never going to get our house in order, that we're going to inflate away any debt obligations that they're foolish enough to hold on to. So I think the de-dollarization trend is going to continue and accelerate. I think central banks will keep divesting of dollars and moving more and more of their reserves into gold. I think the world will, continue to wean itself off of the US dollar for, global payments and transactions. I think global investors will continue to sell US stocks and US bonds and bring their money home and invest locally. So they'll put their money into their own economies, into their own stock markets, into their own bond markets, and leave the US, to the Fed, because the Fed is going to be the big buyer of our debt. And that means massive inflation and a much weaker dollar for Americans and a lower standard of living too. It's long overdue. This should have happened a long time ago. It's ridiculous that the world let us get away with this for as long as it did. But, we got to the point where we're so complacent, we just assume that the dollar standard is going to stay here indefinitely, no matter what we do. And I think that arrogance is going to be a big problem, particularly with this administration, because they think, the world is so dependent on our buying their stuff with the money they loan us that they're going to pay for the privilege of that. And they're going to absorb these tariffs, which is ridiculous. I think that the economic data is likely to continue to weaken. The question is, will it weaken enough for the Fed to cut rates? Because I don't believe that the inflation numbers are going to come down. I think they're more likely to go up. And so there would be no justification for rate cuts given inflation being so far above their so-called 2% target and headed in the wrong direction. So we'll see. Maybe we'll get the cuts, maybe not. But I think the risk is, from the Fed's perspective, they cut rates and long-term rates go up, just like they did last time. And that could be a reason that they don't want to cut rates, is they're afraid that that's going to happen again. And they don't want that to happen. So they're keeping rates where they are to keep long-term rates from rising. So we'll see. But I do believe that regardless, once Powell is replaced, it's pretty much a done deal that we're going to get cuts. But because I don't think the cuts are going to work, in that they're going to backfire, we're going to get a return to QE as well. And that's going to just accelerate the upward pressure on inflation and the downward pressure on the dollar and ultimately on the bond market, which means that we'll eventually get much higher long-term interest rates, even though the Fed is buying long-term treasuries. The U.S. would only save that money if they do all the borrowing at the very short end of the curve. Because if I'm right and the Fed cuts rates and the yield on long-term bonds goes up, that doesn't help the government, right? So the only way the government would save money would be to keep borrowing real short. But that is in a very risky position to put the country in. Because what happens if inflation really ramps and now the Fed has to jack up short-term rates to like 10% or higher, and we've got everything financed with 6-month bills, 1-year bills, then what? So what Trump is wanting to do would literally be playing with fire. But yeah, I mean, Trump doesn't want to do what's necessary to actually reduce the deficit. So he's trying to cheat. He's trying to get the Fed to do it for them by artificially lowering interest rates so we can save money on our debt service. But what Trump should be doing is cutting government spending and reducing the size of the deficits. But he's doing the opposite. He's spending more and borrowing more. Well, I think it's a big influence. I think it's one of the reasons that the price of gold is $3,400. I mean, central banks have been big buyers, and I think they have a lot more gold to buy. I don't think they're that price sensitive. They know what they have to do, and they're going to keep buying gold. And they have a lot to spend. You know, they have a lot of dollars that they need to get rid of, and they're accumulating more dollars all the time because we have these huge trade deficits. And so they end up, getting more dollars, as businesses that earn those dollars exchange them for euros or, whatever currency they need. And the central banks end up with dollars. Oh, so what do? They're going to buy gold. And so this is going to continue. What I think is going to happen is more central banks are going to get in on the game, and private investors are going to step it up. Institutions. The buying is just going to continue to expand, but the supply is not. That's so you're going to have a lot more demand for gold, but not a lot of increased supply of gold. So the price is just going to go much higher. No, I mean, I don't think we're even close. We haven't even taken out the 2011 high, which really was just a double top from the 1980 high. So when you're talking about silver today trading for lower than its 1980 high, the 1980 high for gold was $850. We're at 3,400. So we're at several times that peak price. And silver isn't even back to that price, despite all the inflation that's taken place over that time period. So I think silver is still very cheap. It's been cheap for many, many years now. So it's hard to say exactly when this situation is going to change. But, I think that it will. And, right now, I think it's closer to 90 to 1. We got to 100 to 1 gold to silver, and then we had a pop. But, I think silver is going to much higher. And I think, first it's got to get above 40. But I think the move from 40 to 50 will be pretty quick. And I think once we get through 50, we may spend a little bit of time there, but then I think we take off. And I think we'll end up much closer to 100 than 50 before we get a pullback. But $100 silver does not seem expensive to me, especially when gold will probably be at 4,000 by the time it gets there. So that's still cheap silver.